is there any reason to own some oil and gas stocks? Even if you hate the sector, you're an ESG investor, but you're looking for pure dividend yield.
So I'm not a huge fan of the energy sector as a whole, but there are certain things that I do like about it. And one of the things I really love about it is the dividend yield and the shareholder friendliness of the sector. I mean, one of the things we look at, a stat that absolutely blows my mind, is that the dividend yield on the energy sector has actually been higher than financials. We know that a lot of investors who have been moving into equities in the last, frankly, since the financial crisis, have been coming into this market to get yield. And that may not be the top priority at this particular moment while people are de-risking, but once we get out of this, I think that's going to be a huge theme for equities again, and I think it should benefit some of these names with huge yields. Now, again, I don't love the broader energy sector, and part of it is because of those ESG concerns. And frankly, regardless of what you think of ESG, I know some of my clients hate it, some of it love it, but they are getting flows. It is a growing part of the asset management industry, and for better or worse, those climate concerns regarding those stocks do matter. Yeah,
and they are. And Steve Grasso, I mean, listen, I called it the Cerberus. It's the three-headed dog. I mean, first off, you got Corona and global oversupply. You've got ESG, okay? And you've got a world where there's so much debt that if you just sold every oil and gas stock that has the highest net debt to earnings ratio, and sold it short, you'd probably be you'd be a very rich person. So
you talked about yield, and ExxonMobil's dividend yield is 7%. The stock's down 29% year to date. So when you look at the E&P side of it, I think we're in an oversupplied world, and we're heading towards an under-demanded world for the commodity itself. So EOG is an E&P company. They're down 28%.
And they're one of 6 with a high credit rating.
Right. And now you look at, these are where you should, in theory, be putting your money. Now you look at who benefits from a lower price in oil, and it's the refiners. Valero is a refiner. Valero's down 28%. So there's no place to put your money here. And if you look at crude, 42 to 43 on a chart is where it bottomed in 2016, 2017, 2018. So it must hold that level, 42.50, 42.5, up to 43.5 for 3 years prior. The problem is it doesn't show any signs of having that ability to what Lori said with ESG investing. No, you would think these stocks cause cancer the way people are treating them.